Hey everyone, happy Monday. Hope you guys are having a great day. Thank you so much for coming in to watch this video. We got 5 miners providing their quarterly results for Q3. So we do have a lot to go over. We'll try to get through this as fast as we can. I am recording this kind of late. I do apologize. My son needed help with his homework. So I'm recording this at like 9:15 right now. And by the time it gets uploaded, it's going to be like 11 o'clock. Okay, so I do apologize for that. You guys can watch it in the morning, obviously, when you do wake up. But we'll have the chapters down below for you guys to follow the companies that you do want to follow. So we have Bitdeer, Hive, Mawson, Q3, and Terawulf to go through, and we'll go through them as fast as we can, okay? But as always, you guys know the drill here. This is not financial advice for entertainment only. Please do your own research, and I'm invested in the following coins and companies for full disclosure. So let's take a look at the first one here. We'll try and point some things out if it's something important. Otherwise, we'll just get into my spreadsheets here on these guys. So first one is Bitdeer. Bitdeer reports unaudited financial results for the third quarter of 2023 and operational update. And here's what we do have for them. We'll see if we can kind of skip to the main parts here relatively quickly here. Average cost of electricity was approximately 3.2 cents per kilowatt hour in the third quarter of 2023, which is really good. Their average miner efficiency was 32.4 joules per terahash as of September 30th. So that's a little high. We want to see that come down below at least 30 joules per terahash come the halving event. We're going to see in about 5 months. This is something that I actually really love for them providing. This definitely helps me out tremendously here. In the past, I was trying to estimate what was their self-mining and the other parts of it as well, trying to figure out what the electricity cost was for each. They have done an outstanding job here providing this for us, so no more guesswork. We actually have the real numbers for them. And so first of all, thank you Bitdeer for getting this done. This definitely helps us out tremendously here. So we'll take a look at the numbers here that we do have for this. I included that into my spreadsheet as well, so that's in there now. We can kind of run some metrics on that as well a little bit. We'll get through all of that. Next, down here, if we scroll down even further, let me see, their net loss. So their loss was a little bit lower than previously. So net loss was 1.8 million compared to a net loss of 22 million in the third quarter of 2022. So a year ago, basically. So that's good. That's getting better. Let me see here. We talked about that net loss, and I think that was it here that we wanted to go over. But yep. Why don't we just take a look at the numbers that I do have for them, and we'll go through and explain everything as best we can here. So Bitdeer, I believe Bitdeer, the shares outstanding are still the old numbers. They haven't provided the actual Q3 results through the SEC yet, which is what I'm waiting on to get the numbers for them. And if we look down here, yeah, I still have the Q2 numbers for them. So I'm waiting for those to get released. Once those get released, we'll get it updated up top here. And we'll have a better picture as far as what their market cap is by stock price right now. You can see that their performance here over the last 12 weeks hasn't been great. They've been definitely beaten down here. The reason for that is the lockout period, or for early investors to be able to sell shares, has ended, and a lot of people were selling shares. Obviously, the early investors and things like that are now out of it, basically. Going down here, we can see here that their hash rate for self-mining has improved nicely. Their revenue has also been increasing nicely for self-mining, so that's good to see as well. And then we're looking at the last 4 quarters. For them, it's actually the last 3 quarters because they became public here this year, so we only have a couple of quarters for them right now. But we did see an increase in revenue here over, well, in Q2, they peaked at 93.82 million. It has come down a little bit here to 87.3 million, and that is mainly based on some of their hosting business, some things like that. Those revenues have come down, whereas their actual self-mining has come up. So that's kind of good there. And we also can take a look at the profitability now for those segments, which we will do towards a little bit here in a couple of minutes. The last 4 quarters operating costs have also kind of flatlined here a little bit here in Q2 and Q3. So they're at 84.46 million. So that's good to see. Their cost to mine 1 Bitcoin minus depreciation. This is for self-mining. We're not looking at the other business segments for them. That has come down to 16.15K. So that's good there. Bitcoin mined quarterly and for self-mining again has been increasing here, so that's good there. Debt to equity, lower is better. That has come down, so that's good. And then current ratio is still really good here at 6.45. Basically, they have 6 times the current assets to pay off current liabilities. So that's good there as well. Total current assets you can see here is at 365 million. It has been coming down here, but they have been buying miners, other things like that growing, so that's okay. Total current liabilities has increased a little bit here to 56 million from the 47 million we saw, which is okay. And like I said, they're buying miners, growing. That's okay there. Okay. Coming down here into the actual spreadsheet here, we'll take a look at some of these metrics here after we go through the numbers here. Big things to take away from here are total current assets did come down a little bit here to 365 million from 376 million. Total assets did increase, which is good, 621 million from 619, so that's good. Total current liabilities also increased to 56.6 million from 47. Big increase here was on trade payables and accrued liabilities. That one went up about 8 million roughly, about 7.5, something like that. But did increase here. Let's see here. What else do we have here? Total liabilities went down to 302 million from 310, so that's good there. Net assets was 318 from 308, so that's good there as well. And then total liabilities and stockholder equity went up to 621 million from 619 million. Okay, now revenues. This is where it gets kind of interesting here because now we actually have it broken down by them for each segment, and then the actual costs for each segment, depreciation for each segment, and other costs as well. So this definitely helps us out. Big thing here is self-mining increased to 30 million from 21.5 million. So that's good. It's been increasing here quarter over quarter, which is what we want to see. Cloud hash rate actually is down here a little bit here, about 3 million, 2.5 million or so from the prior quarter to 15.5 million from 18. General hosting is also down to 22 million from 27.7 million. And then membership hosting is also down 16 million compared to 23.9 million. I'm not sure why they are going down in revenue on some of these hosting. I don't know if they're losing customers, maybe. Potentially, not sure why that is. But when we look at their actual profit margins on this, maybe that's why. Maybe they're charging a little bit too much for it. But we'll take a look at it here shortly. Total revenue came in at 87 million compared to 93 million. So that's obviously down here. And let me see here. Before I was calculating, trying to figure out what their energy for self-mining was. Now we don't have to do that. It's down here. Energy infrastructure, everything that's included here is at 66 million. So that's down from the 77 million that they had in Q2, which is good. And then here we have the electricity cost for self-mining was 15 million. We now have also cloud hash at 3.5 million, general hosting at 9.4 million, and then membership at 9.2. So if we look at the numbers here, we can see it's roughly 50% of self-mining, not including any other depreciation or anything else in here. So depreciation is down here. You can take a look at that. I've also included share-based payment expenses in here as well. Based on the numbers that they provided here, I had to add that in order for the numbers to work from the sheet that they provided, which they didn't break down the share-based compensation. They just put it in as expenses for energy and infrastructure. But before we had that included as well, so I added that in there. That was a 2.9, which is definitely an increase here from the 1.145 million that we saw in Q2. And then obviously we have also other expenses. For self-mining was 2.3 million, cloud hash rate was 1.2, general hosting was 1.7, and other membership hosting was 1.29 million. Okay. Now going down here, we can see the total profit here was for them. Gross profit minus depreciation was 34%. Gross profit was 24% if you include depreciation in there as well. So that's pretty good. And then for self-mining, they were at 41%. That's not including depreciation, or right, we're taking minus depreciation in there. So you see that their cloud hash rate was at 69%. So I wonder if they're losing customers because they're maybe charging too much. Maybe. I mean, 69%, it's a really good profit margin there for them. General hosting also came in at 67%, and then membership hosting was at 34%, a little bit more in line where I think things should be. But it's nice to see that they are very profitable in these two segments. I was thinking they might be like 15, 20%, but this definitely beats where I thought they would be on those segments. Obviously, this is not including general administrative that go into it and all that, but still, even if you take that into account, you're maybe reducing maybe 10, 15% of that revenue there, maybe, okay? And selling expenses was up a little bit here to 1.9, not a big number here. Research and development was up quite a bit here, was up about 2 million to 8.5. General administrative was kind of flat, a little bit up, about 400,000 up, not too bad. And then let me see here, profit from operations or loss, they lost 4.4 million compared to 41 million in the prior quarter. So that's actually pretty good. That's looking really good there. Okay, profit loss before taxes, everything else said and done. Total comprehensive income was negative 1.8 million, I guess you could say. They lost only 2 cents per share instead of the 36 cents in Q2. So I think this is actually really good. Okay. And then if we took out the depreciation on this, they would be at about 16 cents per share on that. Okay. So that all looks really good. Coming up here, we can see here that they started out, well, they mined 1,085 Bitcoins based on what was reported. Starting hash rate was at 3.8. They finished out at 7.2 exahash. And then the average hash rate for the quarter was about 5.5 exahash. That resulted in a cost to mine minus depreciation of $16,000 per Bitcoin roughly. Their debt to equity current ratio, we covered that already. Book value of equity, we covered. Oh, you can take a look at that. It's 318 million. Price to book ratio, 1.316. Enterprise value of 419 million. And then beta, I should move that over. That is at 4.5 million here. EV versus EBITDA was 92.76 now. And then revenue here, comparing that to general administrative compensation, was at 19% of that. So that's actually really good. I like to see that below 20%, if not better. And they definitely got below it. It went up a little bit here from the 17.5 they had, but they also had more revenue in Q2 than they did in this current quarter. And so it's not too bad. They're still below 20, which is good to see. Okay, and like I said, the number of shares, we're still waiting on that right now. And I was off by about, so this is for self-mining here that we're looking at numbers. I was off by negative 0.47% on the number. So really happy with that. Now that we're also getting the other business segments, we'll see if we can maybe track those. It might be a little bit difficult because they don't report on it too much as far as how much those have generated, but we'll see. We'll see what we can do on there, okay? Looking back up over here, based on the current quarter that we're in, which is Q4, and the last 3 quarters, which would be now the actual numbers for Q3, Q2, and Q1, I have them between $22.63 to $33.95. They're at $3.77. I think they're way undervalued based on the fact that they are generating a heck of a lot of income from, or profit margin on the other business segments and on Bitcoin itself. So they definitely should be valued a lot higher than where they are right now. But we'll see how things go forward. Obviously, the miners are beaten down because we have the halving event coming up, and that's obviously having some miners, or not miners, some investors possibly short the stocks before that because they know the revenue is going to get cut in half at 50%. So that's kind of where we are with a lot of these miners right now being undervalued tremendously from where they really should be valued. Okay. Then if we look at, obviously, the last month here, which was October, that we have numbers for them, multiplying it times the 5 months before the halving event and then 7 months after the halving event at 50%, we have them at $4.69 to $22.03 roughly. But so they should be somewhere around there, right around, I'm guessing probably between around $20 or so right now, even with the halving event coming up. Okay? But that's if Bitcoin stays where it's at, network hash rate stays where it's at as well, but it's still going to change. So that's kind of what we're kind of estimating here on this, okay? Other than that, I think they've done a fantastic job here. I'm really happy that they provided the numbers that they did. Let me know if you guys are invested in them, if you're planning to invest in them. What do you think of all the numbers? But this is kind of the way I see them. So I gave this a pretty good result here. All right, so that's it for Bitdeer. Let's take a look at the next one here. Next one's going to be on Hive. And Hive obviously provides their quarterly revenue of 22.8 million with a gross operating margin of 4.6 million and production of 801 Bitcoin, which is less than it was the year before. But that is mainly because they have, in September of last year, the revenue that they were getting from Ethereum mining converted over to Bitcoin, that stopped obviously midway through September. So they had basically July, August, where they were also mining Ethereum and getting that into Bitcoin, okay? So that's kind of why that has, that's why it's lower. Let's see if there's anything interesting here. Here we go. Okay, so I thought this was kind of interesting here. And our HPC strategy is now growing rapidly on a month-over-month basis. While we booked approximately 250,000 of revenue for the 3 months Q2 2024 period for HPC beta set operations, as of today, I am pleased to announce our beta tests are generating approximately 250,000 of revenue per month. So that's obviously better. So now we're looking at 750,000 per quarter roughly. We are happy to report that our beta test growth appears to be scalable. Demand for our high-quality chips has risen due to huge global demand for AI projects like ChatGPT, medical research, machine learning, and rendering. Okay, so those are all good things, and those will help, obviously, in the bottom line and going forward when they do build it out even more going forward. And I think that's it. Yep. So the rest of the stuff you guys can obviously read over at your leisure. There's not much nothing new that I could find in here. So I'll leave it up to you guys to read this. I'm not going to go over this. I'm not going to waste your guys' time on that. Let's take a look at the numbers that I do have for Hive, and then we'll get into the other 3 that we do have. So we're trying to get through this quite quickly here. So I believe this is for, yep, this is the latest numbers that we have as far as shares outstanding. This was reported at 86,224,848. Their current stock price is at $2.85. Market cap is at 245 million right now. Their performance over the last 12 weeks has been subpar, as has been for a lot of miners as well. They have been growing here slowly. I can say it, I guess, mildly here. I have to check on their stack also. I didn't check on that. I will check on this, how much they're hodling right now for Bitcoin. But you can see that their growth here last year was declining, and that was due to older machines being unplugged, Ethereum mining basically stopping, and then they have done a pretty good job here, but it's been small. They grew approximately from 2.5, or if you look at the bottom here, at 2 exahash in December to about 3.9 here towards October, so almost double from where they were. It's still pretty good, but it hasn't really grown as fast as the network hash rate has been, really. So that's been contributing to them basically kind of, I mean, if you look at the revenue here, they've been kind of flatlined here ever since April of this year, right around 7.7 million, something around there, right? And that's based on, if you're not growing faster than the network hash rate, you're not going to keep up with the revenue increases unless Bitcoin actually goes up in value on that part of things, okay? Here's the last 4 quarters revenue that we do have for them. Q3 of last year, they were at 14.3. Q4, this is their March quarter ending. This was 18.2. And then we increased in the June quarter to 23.57 million. And now Q2 for them, which ended September 23rd, is 22 million. So it's down from where they were in our terms, Q2, but they're Q1. And the current quarter looks like it might be about 25.97 million, which would be nice to see. And that is based on Bitcoin price going up in value. That's helping them out. And then the last 4 quarters operating costs have been increasing, which is kind of what we expect to see, especially with the network hash rate going up in value here. So that's going to obviously have an impact on the cost. Cost to mine 1 Bitcoin minus depreciation has been increasing here to 21.8K as of September. So that has been increasing as well. You can see the BTC mined here, how much they've been mining each quarter. That did come down in Q2 from Q1, or Q3 from Q2, depending on how you look at it. Debt to equity also has been increasing here, but that's still really good. Lower is obviously always better. Current ratio, higher is better. It's still really good. They have enough current assets to pay off the current debt 2.5 times over, so that's fine there. Total current assets have been coming down. They have been buying miners, which is good. And then the total current liabilities has been increasing here ever so slightly each quarter, which still isn't too bad, 25.4 million. And they have 63.9 million total current assets, so not a big deal there. Okay, coming down here are the latest numbers that we do have for them. We'll get into these in a sec here. Total current assets decreased to 69.5 from 75.2 million, sorry. And then total assets actually decreased also 169 million from 188 million. Big difference here on that one was, what was it? The deposits is down. And right of use assets is also down a little bit here. What else do we have here? That was kind of big down. Digital currency was way down to 46.8 from 59. I'm guessing they probably sold quite a bit of their hodl here. We'll have to take a look at that, what that actually is now. They stopped reporting that on the monthly time frame for the productions, which is kind of strange because they were one of the best ones to provide that over the last 2 years or so. So I'm surprised that they've stopped doing that. I don't know if that's because they got below a certain point and they just don't want to report it. Maybe seen by some investors as being negative. Whatever it might be, I think it still would be good to see that. Other than that, that's what we have there. Current liabilities went up a little bit here to 25.4 from 24.1. That's not bad. Total liabilities also increased just here slightly, several hundred thousand to 47 million from 46.8 million roughly. And then total stockholder equity and liabilities was 169.9 million from 188.3 million. So that's down. And then revenues here, you can see, obviously we talked about revenues being down here. Other service revenue, this is their AI stuff. It was only 253,000. Self-mining was 22.5 million. So that is down a little bit. I thought it was going to be a little bit up higher than that. Cost of sales, also quite a bit up, 18.1 million from 15.5. Depreciation, I don't really care about that. Total cost of sales, that's including both here. Gross profit was negative 11.9 million. So that's actually up from the negative 8.5 million that they had in Q2. Let's see, what else do we have here? Revaluation of digital currencies, gain on disposable of assets, that's down, total down there. Expenses. General and administrative was up 3.5 million from the 2.7. I think this has to do with them going into AI more. And then Bitdeer also reported they're going to be going into AI as well next year sometime. Let's see what else we have here. Share-based compensation, way up here, 4 million compared to 2 million here that we've had in the past. So obviously they're handing out some bonuses and shares, it looks like. Let's see, what else do we have here? That's quite a bit up. If we look at total here, net loss gain income from period was negative 22 million from the negative 14 million that they had. Big increase here that I can see. I mean, there's not really anything that's majorly big. Obviously, share-based compensation, everything else, expenses have gone up. So obviously they lost a little bit more here. They lost 29 cents per share, looks like, instead of the 19 cents that they lost in Q2. And then obviously the shares. And then if we take out depreciation and look at the income that they could have possibly had, they're still at negative 15, whereas Q2, I had them at positive 6 cents possibly. Okay, so that's not good. So that's not looking good for them. And I've been kind of saying this for a while that they need to grow into the halving event. They do have an ATM that they could use. Obviously, they don't want to dilute shares, which I understand. But you might be in a position where you actually have to. Okay, BTC mined here was 832, so that's down from the 836.6 that was reported in Q2. Starting hash rate was at 3.3. They finished out at 3.8, so they increased about 500 petahash or so. Cost to mine one Bitcoin minus depreciation, like I said, 21.8 thousand roughly on that one. Debt to equity, we covered that. Book to value, you can see that here. Price to book ratio, enterprise value, EBITDA, EV versus per EBITDA. And then general and administrative compared to revenue here was up quite a bit here. It was at 33% compared to 20% the prior quarter. So don't like seeing that. I'd like to see that below 20%, like I always keep saying, if not better. But yeah, that's kind of where we are right now with them. So based on this, on the numbers that we do have for them, I was off by 3.51% on the plus side. I had them at 23.3 million in revenue potentially. They came in at 22.5, so I was off. I'm still under the 5% that I want to be in within. I'd like to be much closer to that, within less than 1%, but we got here for some reason. Other than that, going up here, based on, like I said, the current quarter that we're in, last 3 quarters, which are actual numbers now, I have it between $5.21 and $7.81. Looking forward into the next future, or 12 months out, based on the October numbers that they provided us with, I'm between $3.88 and $5.82. So they're at $2.85 right now. I do think they're undervalued, but pretty close to being where they probably should be valued. So only off by about $1 or so, so not too bad. But like I said, they need to grow into the halving event. They need to really, I mean, do whatever they can to increase hash rate, increase facilities, things like that, like some of the newer miners have been doing, which have been around for only a couple of years, whereas Hive has been around since, 2017, I believe. And it seems like they've kind of stalled out. Their growth is much slower, everything else. Obviously, we'll see how things progress going forward to them, but I think investors are looking for growth. We do have some growth through them, but not a lot. But I'd definitely like to see them grow even more. Okay, I'm invested in Hive, as you guys know. So I wish they would invest more in growth. But that's it. Let me know what you guys think of that one, and then let's get into the next one here. So the next one's going to be on Mawson. Mawson Infrastructure Group Inc. reports Q3 2023 financial results. I don't think there's anything in here that I highlighted, which I didn't. You guys can read over this. This is concerning, to say the least, in the numbers that I saw here. We'll go over that. I mean, they're priced right now like they're going out of business, potentially. So let's take a look at Mawson really quick as well. We'll go through all the numbers. I'll point out all the things that I'm seeing here. Let's see your Marathon, Mawson. There it is. Okay. So Mawson, I think they reported those numbers, Q3 numbers, yep. So those are the most recent numbers that we have for shares outstanding. Those are at 16.6 million right now. Stock price is at 50 cents. They're valued at $8 million right now. I mean, they have more than that in assets as far as miners and buildings and things like that. Their market cap is right now atrocious. You can see that their performance over the last 12 weeks has also been really bad. It's like my investors are looking at them like they're going to be going out of business, shorting them probably to kingdom come here. Not a lot of growth left in them. They did sell facilities last year to CleanSpark, which I believe was the Sandersville facility. And you can see their hash rate has been kind of up and down here all over the place. They're at roughly 1.4 exahash right now. The revenue has also, for self-mining, has been too great. They peaked in August at 2.45 million. In September, they were at 2.34. We're still waiting on the numbers for October. We are getting the numbers relatively late in the month always, which is also concerning, because if you really don't know what's going on in your business within the first couple of days of the new month, I mean, that's kind of worrisome. But we've seen this with other companies where they either stop providing quarterly updates or not quarterly updates, production updates for each month, because they're just cash strapped, right? And it costs money to put these things out. So it is a concern, okay? Nonetheless, here's the last 4 quarters of revenue. It has been increasing here. 2.2 million in Q4 of last year, 2.7 in Q1, 4.9 in Q2, and then 6.9 million here in Q3. So it has been improving nonetheless, but it's still not enough, I don't think. And then this current quarter that we're in, I'm estimating about 8.29, depending where Bitcoin goes and stays at. But we'll see on that one. The last 4 quarters operating costs here has been kind of flat. It hasn't been too bad. It's been up and down a little bit here, but mostly right around 11,000 mark, which isn't too bad as well. All right. Cost to mine 1 Bitcoin is up to 19,000 here from the 18.45 that they had in Q2. Bitcoin mine quarterly has been increasing, but I'll leave it at that. It has been increasing. Debt to equity lower is better as well. This has been increasing as well, so that's kind of a troublesome sign there as well. Current ratio higher is better. That has been coming down. That's also worrisome right there. Total current assets, you can see here, 13.65 million compared to total current liabilities of 46.63 million. That's a concern there as well on that one. And then we'll scroll down here. We'll look at these at the end here. You can see total current assets, 13.6. It has been coming down here ever since pretty much Q3 of last year. You can see that they were at 37.3 million, and then it's been just coming down here ever since then. Each quarter we've been coming down. Total assets has also been coming down here ever since Q2 of last year, and then it's consistently been coming down here. They're down to 87 million right now. So like I said, their stock is valued less than their total assets right now, which is just unbelievable. Total current liabilities is 46.6 million. That has come down here a little bit here from the 47.8 that they had. Total liabilities went down a little bit here to 47 from the 49 that we had as well. And then total stockholder liabilities and stockholder equity went down to 87 million from 104. And then when we look at the revenues here, self-mining was 6.8, hosting was 2.9. That's actually come down quite a bit. They did state that they lost a customer, and they got somebody else new in there, but that's obviously going to take a little time to get that back up. Let's see here. What else do we have here? That's kind of interesting. Expenses, general administrative. Here's a good sign. That actually went down to 3.6 from the 6.2. So that's good there. Share-based compensation, a big uptick here to 3.7 million from the 687,000. Don't like seeing that, especially when the company is in a little bit of trouble. Depreciation, amortization, don't care about that, but that's obviously gone up here. Net loss gain income for the period was negative 16 million from the 17 million we had there, so it's a little bit better there. Profit margin, I'm still showing a negative percentage mark on both of those, whether you use depreciation or you don't. Cost of revenue minus depreciation was 11.3. Going down here, what else do we have here? That's kind of sizable here. Loss before income taxes was negative 19 million, so that's obviously higher than we had in Q2 of 15.8. And the net loss attributed to Mawson Infrastructure Group shareholders was 19 million instead of the 17 million, so we actually lost $1.15 per share instead of $1.12 loss on Q2. So that has been growing also, which is not good as well. Okay, going back up here, we'll take a look at some metrics as well. Cost to mine 1 Bitcoin, like I said, has been going up as well. You can see where they started out at. What is it showing? 1.4. They ended at 1.4, it looks like. Hash rate increase here. Oh, something's not adding up here. Oh, yeah, 0 increase on that. The average should be, this is actual average hash rate. Oh, I think I got those mixed up here. But they're roughly around 1.4 on that one. Cost to mine, we talked about that. Debt to equity, current ratio, we talked about that as well. Book value of equity is 40 million. Price to book ratio, 0.2. Enterprise value was negative 40.9 million. EBITDA was negative 6.9 million. And then revenue, comparing that to general administrative compensation, that was 65%. Really high. Really need to see that come down. Never want to see that above 20%, especially for smaller companies, but that's really high, 65%. So general administrative compensation was 7.4 million. What does that entail here? If we look at that really quick, that's just, oh, we're including that in share-based compensation. So that's most of it here. And then general administrative was 3.6, and then share-based compensation was also 3.7. So yeah, pretty much double that. So you could possibly take that number, the 65%, if you don't include the share-based compensation part of things, you could reduce it down to 30, what is that, 32%, something like that. Still really high. You need to get that below 20 on it. Okay, so based on all those numbers here, here's what we're looking at. If everything was equal, they were doing well, and they were, growing like they should be, which they're not. I have them between $3.43 and $5.15. They're at 50 cents right now. Right, the tough part is the debt, the lack of growth, everything else. That's weighing the stock way down here. So I can see why it's priced the way it is currently right now. So let me know what you guys think of them, and I'll leave it at that. But like I said, for other miners and for them, they need to grow, and maybe they need to dilute a little bit more, get rid of some of this debt that they have hanging over them, so they can actually finally grow really well. But I mean, obviously, you can see the difference here between some companies, how some companies are doing really well, and some companies are struggling. Right, we're seeing Mawson here struggling a little bit, well, quite a bit here, and then we'll see also on Cypher when we look at them as well. They're going to be struggling as well going into the halving event. But yeah, let me know what you guys think of them. Let's get into the next one here, Sphere 3D. And I got to take a sip of my water here, so bear with me. I'm going to mute this. Okay, sorry about the dead noise there. Here's no, I can't speak. Here's Sphere 3D reports third quarter 2023 financial results and operational updates. That was a mouthful. Okay, I don't think I highlighted anything. There wasn't anything interesting in here. Nothing that we've already haven't learned. So I'll just leave it at that. There's the 9 months, and then that's it. So let's take a look at the numbers that I do have for them, and we'll get into that one, and then we'll finally finish off with Terawulf. So Sphere 3D right now has, as of Q3, 14.3 million shares outstanding. Stock price is at 96 cents. Market cap is at 13 million right now. You can see that they're actually better priced in market cap than Mawson is, even though Mawson has hosting, other things as well. They have assets as far as buildings and things like that, which Sphere 3D doesn't really have that. They have all of their miners hosted with other third parties. So you can see how things are kind of being valued here. Performance-wise here, over the last 12 weeks has been atrocious. They're down 31, almost 32% from 12 weeks ago, and it's just been down every, period that we track here, 8 weeks, 4 weeks, and 1 week on it. You can see that they're, let's take a look at their BTC production. Where's their BTC? There it is. So they peaked in May with 77. A lot of miners had a really good May because of the transaction fees for Bitcoin, and that month helped a lot of them out. But they have been coming down here, but have recently been kind of going to the upside as of August. They're up to, from 58 to 69. So they also had curtail, and it seems like the curtailing part of things has been coming down as well for them as we get into the colder months now. You can see that their hash rate has some big bumps in improvement bumps as far as speed is concerned, but they go flat for a couple months and they have a bump. They go flat for a couple months and they have a bump. It's not a sustained, continued growth going forward. BTC mined revenue, they peaked, like I said, in May here with 2.14 million, and then it's been coming down. October was a better month. Bitcoin was coming up in price. That helped things out with 2.05 million here in revenue. So that was good. Last 4 quarters revenue, self-mining has been increasing, which is good to see, but I don't think it's enough. Current quarter, we're looking at about 6.21 million. Current quarter Q3, we're at 5.1. Last 4 quarters, operating costs minus depreciation has been going up. It looks like it has kind of paused here a little bit here in Q2 and Q3, pretty close to those numbers there. Cost to mine 1 Bitcoin minus depreciation is at 23.62 thousand right now. You can see their Bitcoin mined quarterly has also kind of stalled out a little bit here. It's up a little bit from the Q2 number, but not much in Q3, 281. Debt to equity, obviously lower is better. They're at 0.35 on that. Current ratio higher is better. They're at 0.78. So they really don't have enough assets currently to pay off current liabilities. And that's at 5.2 million current assets. And the current liabilities is at 6.7 million roughly. Going down here, we'll take a look at that in a second here. Take a look at their current assets. Like I said, it's 5.2. So that has increased a little bit here from the Q2 numbers. Total assets actually went down to 59 million from 71 million. And we've been seeing that come down here quite a bit here. They had 264 million in assets in Q1 of 2022. That was just basically almost 2 years ago now, you could say. And look at that burn through that cash there. So that's definitely tough. On them, total current liabilities here is at 6.6 million. So that is down here from the 7.1 that they had in Q2. But that is higher than what they've had here for a lot of the quarters here that we had. We were below that for most of them. Total liabilities is at 11 million 500. That's down from the 12.8 that we had here. But that again has been going up here from where they were prior quarters as well. And then total liabilities and stockholder equity is at 59 million. So that's down from the 71 million that we had here. And it has been coming down every single quarter as well going forward. Total revenue has been increasing, like I said, which is good to see. Let's see here. Cost of digital mining has also been increasing as they're mining more Bitcoin. Their machines are being plugged in. Let's take a look at other numbers here that were kind of high from the previous one. Don't care about that. General and administrative has come down a little bit, so that's fine. Cost of digital mining revenue went up a little bit. What else do we have here? Loss from operations. They lost 6.4 million compared to a loss of 4.7 million here roughly in Q2. So that's not good. Gross profit minus depreciation, negative 76%. Cost of revenue minus depreciation is at 8.49 million. And then what else do we have here? Let's see, loss before income taxes was negative 6.3 million compared to the 4.7 that they had. And they lost, what did they lost? 50 cents per share compared to a loss of 44 cents a share. I mean, they've been losing pretty much every quarter here that we're tracking them. And then even if we take out the depreciation from this, they're still losing 34 cents per share. So that's not good there. All right, looking at the numbers up here, we covered the price to mine Bitcoin minus depreciation at 23.6 million. Debt to equity, covered that. Current ratio, book to value is 47 million. Price to book ratio is 0.29. Enterprise value is at 1.6 million. EBITDA, negative 4.2. EV, EBITDA ratio, negative 0.386. And then when we look at their general and administrative compensation compared to the revenue, well, that's 65% right there. That did come down from Q2, but it's still really high. Got to trim the fat. Like some of these other companies, they need to trim the fat, unfortunately, to possibly survive this coming halving event that we keep speaking of. Okay, based on this, I currently have them for the current quarter and the last 3 quarters between $3.28 to $4.81 with a PE of 5. They're at 96 cents right now. We obviously see it. Investors obviously see the issues that they're having here with growth and, well, cash flow and everything else. So that's why they're valued where they are. And if we look forward, next 12 months, 5 months before the halving and 7 months after the halving event, with a PE of 5 here, using the October numbers, we're looking at $3.21 to $4.81 for them. And that might be even generous there. All right. So I think this is another one that might be in trouble here come the halving event. Depending on where they end up growing, what they end up doing, it's going to be a tough time for them, especially the couple of months after the halving event, depending where Bitcoin goes. Right, Bitcoin starts skyrocketing because we get the spot Bitcoin ETF. Well, then they may not have to worry about that. But if Bitcoin kind of stays around 40,000 to 50,000 range, it's going to be tough for these guys. Okay, so let me know what you guys think of them. And then finally, let's get into the last one here that we do have, which is on Terawulf. There are some interesting tidbits here on Terawulf also. So Terawulf reports third quarter 2023 financial results. And here's what we have. So they expect to pay down approximately 7 million of debt, which with cash generated in Q3, of which 5.5 million was repaid in October 2023. So it looks like they did that part of it here. They ordered 2.8 exahash worth of Bitmain S19 XPs at $19 per terahash for delivery in December 2023. I don't know if that includes delivery or not. I know that Iris Energy and CleanSpark got the latest generation, the S21 miners, for like $14 after credits and things like that. So they actually paid, looks like, more for the older miners than some of the companies are paying for the newer miners, which is also interesting there. And the way that they're having these set up is kind of interesting as well. The terms on this is kind of interesting. We'll take a look at that down below here. Let's see here. Here it is. So announced an order of those. They're paying total price of $75.4 million. After coupons and credits, the company currently expects to pay $53.4 million or $19 per terahash. And then when we look here, this is kind of interesting as well. We plan to energize Building 3. Let me remove this. Building 3 with S19J XPs, 5,500 of which will be self-mining, with the balance of miners to be host-to-owned for Bitcoin until we complete payment for the entire 18,500 miner order, which we expect by the fourth quarter of 2024. So that's an interesting kind of arrangement that they have there. I don't think I've ever seen that with any other miner being done right now. I'm trying to understand if the host to be owned, so while they're being hosted, will the revenue that those are generating, will that be attributable to paying them down, or will Bitmain basically get that revenue and then they still have to pay for the miners and on top of that? It's kind of like getting used miners potentially by the end of the fourth quarter in 2024. Also, the weird thought in my head was, we know we're possibly going to get into a little bit of bull run here at possibly June, July, maybe after the halving event, right? With Bitcoin going up potentially pretty well, that seems like a really weird time to be still hosting those miners. It would be almost better for them to dilute, buy them outright, and be done with it instead of going through this path. But let me know what you guys think of that, okay? This was just a little weird. Okay, other than that, I don't think there's anything else here that piqued my interest here. We'll take a look at some of the numbers here for them, and we'll call it a day. It's going to be a long one. This is going to be, gosh, at least probably 45 minutes long, if not longer. Okay, so shares outstanding for Terawulf. I don't think I'm using the latest ones. I am using the latest numbers. Okay, so that's the latest numbers that we do have for them for shares outstanding. That's 238 million right now. Market cap is at 240 million. Stock price is $1. I still think that they're undervalued, but there's a reason why they might be undervalued for that. Their performance over the last 12 weeks has been also atrocious. They're down 48% from 12 weeks ago. From 8 weeks ago, they're down 29%. From 10 weeks ago, they're down 10%. From last week, they're down 14%. So there is some concern here with this stock and with others as well. We can see here that their Bitcoin production has peaked in June, 347, and it's been coming down here as their hash rate, I think, has kind of stalled out here a little bit. And the weird thing with them, they also have hosting that they do for the time being, and other things, which kind of makes it a little bit more difficult to track them properly than other miners, but we try to manage as best as we can here. They've been selling, obviously, everything that they mined here. Their best month was July for revenue at 19.9 million here. October was 19.29. It has increased here, obviously, as Bitcoin price has been going up in value, so that's good there. And you can see their hash rate here is kind of flatlined ever since June. They had a little bit of an uptick here in September to 5 exahash, but this also includes the hosting part of things and the joint venture things they're doing, so it's kind of tough to really read where they're at. This is revenue. This is for everything that obviously that they do. And I don't know if this should be reported, because if they don't have more than 50% of a joint venture or whatever they're in, they should be reporting that as revenue. It should be reported as assets, I believe. So this is a little weird, I think. And then here you can see the last 4 quarters of costs has come up here to 19.7 from the 14.7. And then the last 4 quarters revenue has been increasing, which is good to see there. Okay, let's see here. Cost to mine 1 Bitcoin minus depreciation went up to 13.5 thousand from 8.4. Bitcoin mine quarterly peaked in Q2 with 989. We're down to 944. And that's mainly because they're not growing. The network hash rate is increasing, so that's reducing their production there. Okay, debt to equity, lower is better. It's at 1. We want to see that below 1. Current ratio is also higher is better. They're at 0.1, so that's a concern there, and you can see here why. Total current assets of 12.9, well, like I said, 13 million roughly, and then total current liabilities is at 108 million. That is a concern there, right? They moved some of the long-term liabilities that they had over into the current liabilities, and that's why we're seeing this kind of big jump here recently on it. Let's take a look at the numbers here below. We'll get into those in a second here. So current assets, like I said, was 12.9. That's down from the 14.3. The big thing that kind of went down is cash and cash equivalents. So that's a concern there as well. Prepaid expenses went down as well. And we have amounts due from related parties that actually went up. So that's kind of good there. Let's see here. What else? Total assets is up actually 311 million from 299. So that's pretty good there. And and that's based on what has increased here really was the property and equipment has increased to 181 million from 161 million. Other than that, equity and net assets of investees, that went down to 105 million from 111 million. Okay, so keep that in mind there. Current liabilities increased here to 108 million from 81 million. And you can see the jump in, where was it? Here it is. Current portion of long-term debt increased to 76 million from 36 million. On other things here, I believe kind of went down here. Other amounts due to related parties went down to 1.4, so that's good there. Share-based liabilities due to related parties, that went down to 2 million from 15 million, so that's good. Other accrued liabilities went down to 6.7 from 7.8, so that's good there. And then accounts payable actually went up to 19 million from 17 million. So they're doing some good things here, and there's also some bad things here as well. Operating lease liability, down a little bit here. Long-term debt, here's where the change happened here, right? Long-term debt went down to 84 million from 82, and it got pushed up over here. And let's see here, total liabilities and stockholder equity was at 311 million, so that's up from the 299 million that we had here. So that's kind of good there. Okay, revenue. This is where things get a little bit interesting here. So every month they report the production updates. We get a total of joint venture and the self-mining as well. And that kind of messes with my numbers here. So I've actually sent an email out asking them if they could separate the two going forward. It would definitely help us out, really knowing what's going on for the self-mining and also not providing average hash rates for the month. We would like to see what is actually installed, what should be energized, and then what are they actually running like, right? Because right now we're getting kind of mixed numbers here on that. Okay, so here's what we have. Mining, self-mining, and hosting reported in press release. So they reported 27.9 million revenue. Self-mining was only 18.9 million. I'm guessing the joint venture then is obviously doing the math on it, was about 9 million. Cost of revenues is only being reported on the self-mining side of things. So that we're not getting the full amount for the hosting and the joint venture stuff. It's only for the self-mining. So that's 8.2 million there. Okay. I'm calculating their own hash rate based on what the portion is of revenue here. At 67% is for their self-mining. I'm guessing that they have 3.3 exahash roughly for their self-mining currently. I know that some of the stuff is going to fall off as far as for hosting. That's going to end. It was only for a time being. That's going to stop. So they will increase that going forward, I believe. But right now, I'm calculating a 3.3 exahash for self-mining. Okay, let's see here. So gross profit, this is just based on their own self-mining. Okay. Now, when we get into this part of stuff, it gets a little bit more interesting here. So operating expenses was 442,000. Related party, I think this is a joint venture part of it. So that's actually up here a little bit. General selling and administration was 5.7, and then the related parties was 4.5. It still seems quite a bit there. It's almost, well, it is over 10 million here for the two. I mean, that just wipes out your gross profit right there. Depreciation, I don't care about that. Realized gain on sale. What else do we have here? Total cost of operation went up to 20.3 million from 16.1. So that's obviously a concern there. Operating loss increased to 9.6 million. Prior quarter was 5.8 million loss on that one. Okay, let's see what else we have here. Interest expense has gone up to 10.2 million, right from the 8.4. That's a concern there. Loss before income tax was 19 million loss instead of the 14 million loss in Q2. And then net attributable loss to common shareholders was negative 19 million compared to negative 17 million. So losses increased here, where we saw a nice decrease here from the Q1 quarter to Q2, but obviously Q3 went back up here. So we lost 9 cents per share overall. And then looking up here, we can see here that, let me see here, they were at 4.9, they ended up at 5. So that's kind of where we're at. We added 100 petahash basically in the quarter. Cost to mine, one Bitcoin minus depreciation was 13.5, which is still pretty good number there. And then let's see here, but we're using, which number are we using for the Bitcoin though? That's the interesting part there. Calculated Bitcoin self-mined. Let's see here. So yeah, we're using the calculated number. I don't know exactly what they mined. I'm guessing 611 Bitcoins were mined for themselves. Estimate based on the percentage here again. Okay, so that's how we're estimating that. Enterprise value, 240 million. Debt to equity, we covered that. Book value of equity assets, 153 million. Price to book value ratio, 1.56. Enterprise value, 240 million. EBITDA, negative 1.4 million. Where we actually were positive in the prior quarter. EV to EBITDA, negative 170 on that one. And then general and administrative compensation was 36.8%. Still pretty high. And that is including both for the related party, their own, and then the total revenue here. So we're looking at that combined. Okay. So that's it. Like I said, the big thing with them is the debt, their interests, how much they're paying on that is also a concern, and the balance sheet, right? The big thing is balance sheet for them. So we need to see how they're going to invest going forward into the miners, the growth and everything else, see how they do. All right. And that, looking back up here, going into the numbers here, I have them between $4.07 to $6.11. And that is based on the current quarter plus the 3 prior quarters as well. They're at $1 right now. I do think they're undervalued, but the concern, like I said, is the debt. And the debt, can they get out of that? They can get to a point where they can pay it off faster, or do they need to dilute even more? But I mean, with having 238 million shares outstanding, well, I mean, they could dilute probably what, $50 million worth for what would that be? I have to do the math on it. They got a bunch of shares. I don't know how much that would obviously dilute. They would dilute 50 million shares, so that would be roughly a quarter of the shares, something like that. That might be able to help them out that way. Okay, and then when we're looking into the future, using the October numbers for them, we're looking at $3.32 to $4.97 with the 5 months before the halving event, 7 months after the halving event at 50% as well. And that is it. All right, so a lot of data here, you guys. As always, this will be available to my Patreon members, so thank you to everyone there. That is still $5, and sometimes you guys are able to get like the $4 if somebody leaves the Patreon group for whatever reason. The spot opens up in the $4 group. You're more than welcome to jump in there, grab that as well. But yeah, most of the time it's $5 right now, unless the spot opens up in the $4. And we also have the private Discord channel as well in there, so that's always fantastic to communicate with you guys there. And also, thank you to all the YouTube members as well, helping out. So I do appreciate you guys watching, the Patreon members, everybody. That definitely helps out. And then we'll see what else we get as far as the miners reporting the quarterly results, things like that going forward. We're still missing a couple miners. I think Mawson's one for the production update in October, along with, I think Stronghold is another one that's still missing. Okay, so once we get all the quarterly results, we'll do a number, or we'll run the metrics on them for the quarterly results, see which one did the best for Q3 numbers, which one did the worst, and so on. Okay. Other than that, thank you so much for watching. I know it was a long video. I do appreciate you guys watching. If you enjoyed, hit the like button, subscribe. Helps me out tremendously. Hope you guys have a wonderful, whatever's left of Monday night, and a wonderful Tuesday. I'll see you guys probably Tuesday.